Hey, what's going on, everybody? This is Alex at the Stock Operator channel, and welcome back with another Monday major market update and market monitor update video. And in this video, I'm going to go over the technical analysis of all the major markets: the S&P 500, QQQ, Russell 2000, gold, and Bitcoin. And I'm also going to dive into my market monitor, which has some key breadth metrics that helps us know where we are in the cycle and where we could be going in the future. Hey, if that's something you're into, stick around. All right, so what I want to do is I want to start off with the market monitor. We are currently in a market monitor green, and we are on day 10, and we've moved about 2.49%. The average green cycle lasts about 12.7 days, and the average move is about 3.78%. And now, in order for this green cycle to end, we need 4 distribution days, and currently we have 3. And what that looks like on the chart is this is the IWV. This is the index that I like to track with my market monitor. It's basically the broadest ETF that you can track. And as you can see, I drew in with a trend line that cycle forecast. And that cycle forecast was signaled on this day here. And yeah, it looks like it made a nice move all the way to the top here for a 3.7% gain, and then we're kind of pulling back, and then it's forecasting. If we were to go to a yellow cycle when the 13 days is over, you'd see this action right here on the yellow. So that's kind of what we're looking at on the market monitor. But let's dig into the major markets, and then we'll go into some more of my proprietary market monitor later on in the video. All right, so what I want to do in this video is I want to start off with Bitcoin because I know a lot of people in crypto are feeling the burn here. And it's looking like, it tried to bounce today, intraday, but it's still down reasonably today. And it seems to be like it wants to break this level right here, which has been the main support for this throughout this entire range. And as we could see, we made some videos earlier on where, okay, we had this breakout and it only went about, 10%. And that's a sign of weakness because, after it broke out of this range that was, that long, a nice little cup and handle, it should have gone more than that. And it should have at least held here at this 16 period moving average and moved there if it was going to be a strong breakout. The first initial weakness was that it actually broke down out of the 16 period moving average after that breakout. And then it's just kind of been chopping around. And actually, I think it's forming a distribution top with the up thrust after distribution right here. And as you can see, this is the main distribution with the volume pickup here. And throughout this range, every time it's dipped into here, it bounced, dipped, it made a higher low, and it bounced very strongly. And this is when we were kind of getting constructive on it, but it's looking more like it's an up thrust after distribution, which basically means we peak above this little range and then we come back down. And then after that happened, this is the lowest it's been in the range, okay? And it broke this higher low sequence here, and then it had a very weak bounce, okay? And now we're just really living inside of this, which is not good for the bulls. Now, what would be potentially bullish is if this thing kind of just really, took it on the chin here and it V'd again. That would be something that the bulls should look for. Um, if it was to regain some traction here. But, seeing as how we're going to get into some other markets, the QQQ is really going up. I mean, typically Bitcoin and QQQ track, but they seem to have lost that correlation here this year because Bitcoin's not really performing that well. Okay, so let's actually, speaking of QQQ, let's get into the QQQ. So QQQ here, and actually I can get rid of some of these lines here, but the QQQ is very, very strong here. Okay, so it has been in a primary uptrend, driven by AI and the data center spend. I drew this, you know, um, channel from the onset of the bull market in 2023, and which it had kind of just been living in this channel, whether it goes an up thrust or it springs below it, up thrust, springs below it. Then we had this big breakdown And then when we got back up to here, I started to get bearish, but that was the wrong call. I mean, even after here, this was kind of a tell, and this is probably why we went up so fast. Is because this should have produced more downside, and it didn't. Um, all of these should have produced more downside, but they didn't, and then so it finally broke back into this trend, and we're on the upper part of the trend, which is extremely bullish for this market. It's above the middle trend line, and it's just moving up very nicely. And so you see some volume coming in here, but even in one down day on lower volume, it just gaps up and goes up. So with that, the QQQ remains bullish. Okay, so let's check out the IWM. So the IWM, the small caps, which should be benefiting from rate cuts, are really struggling here, not moving up as quickly as the QQQ. They did come out of this down day very strongly, but something's going on here where they're not following anymore. So we're just watching that. I just don't think that this thing is as strong as the QQQ anymore, and seeing as how we're kind of stuck here on the anchored view app from the previous Fed meeting, and we are below the anchored view app from the Fed meeting a couple days ago. We do have this wick, which is generally bullish, but given where the market monitor cycle is, I would expect a little bit more downside, because if this thing is a weak index and we go into a market monitor yellow, it's just a wait and see kind of a thing where this thing could actually break down and start testing some other moving averages. So that's what I see there. So let's move on to gold. So yeah, we kind of called that gold is pretty much topped here. And as you can see, I mean, if we go back, this is the largest volume in a very, very long time. I just think the gold move is over. And what we could see from this is somewhat of it looks similar to what happened with ARK. Okay, so ARK Innovation ETF. Let me see if I can move this over and see here. We'll go to the weekly chart. Yeah, something like this. So if you see here, something like this, where the stock makes, or gold in this case, makes a very big move. It comes back down and it has a very weak bounce. This is typically what you see on blow offs, this kind of flag pattern afterwards. Okay, so that's what I think could happen with gold. And if we go back to GLD, similar kind of structure here, and it's coming back to the quarterly moving average, and the bounce is very weak. So expect gold to go kind of sideways for a very long time here, and then potentially break down. That's what I would be looking on for gold, because this kind of volume at the top, this kind of volatility at the top, with the conclusion of this candle here, it signifies that it's definitely done going up, to say the least, on that one. And then lastly, we can check out crude oil. So we're getting a little bit bullish on crude oil because this thing has this big upthrust event here. I think that was during the Iranian thing. Or something of that, like that. And then this thing could have crashed. It did have a little bit of follow through here, but it made a nice comeback after that event. So given that that was the initial reaction after that sort of an event, that's actually quite bullish. And then it broke it down, okay, here, and it's springing and it's coming back right here. So crude oil is looking decent here, and if this thing can get going above this green line, the yearly moving average, that's would be bullish for crude oil. And then lastly, the S&P 500, very similar to the QQQ. I kind of already went over the QQQ because they basically have a lot of the same stuff. It's just looking very strong, and nothing is wrong with it. So that's it for the indexes. What I want to do now is go over the market monitor and show you guys some interesting stuff that I've been checking out. Okay. All right. So I always like to start the market monitor segment with the stage analysis. And this is a chart of the stage analysis. Essentially, the green is stocks in stage 2 uptrends. The orange is stocks in stage 1 basing patterns. So a stock that has gone down and is going sideways. Stage 4, which is this red line, which is very elevated at the moment, and stage 3, you can kind of see it, this yellow line, which is also elevated. And as you can see over the last, let's say, call it month and a half, we've seen a decline in stage 2, and an increase in stage 3, and moderation in stage 4. And this is the interesting thing about today's market, where, there's a lot of stocks in stage 4 and stage 3, and not many stocks in stage 2 and stage 1. So that's later cycle on the surface. But there is something interesting that I'd like to show you guys inside of stage 2. Okay, so this is inside of stage 2. And basically, inside of stage 2, I've got three different phases. Essentially, when the stock is just emerging out of a potential stage 2 breakout, which is this kind of grayish green. Okay. And then stage 2, which is a confirmed uptrend for the first 6 months. Okay. And then stage 2B, which is the stock has been in a uptrend for 6 months or longer. And as you can see here, it has the green, which is the onset of it, the bright green, which is the first 6 months, and then the dark green, which is after 6 months. And typically bull markets end when, we have about, let's say, 500-ish stocks in stage 2B. Okay. Um, and so that tells me that this bull market is just, it's relatively new, because as you could see here back in 2020, okay, we had a big peak or spike in stage 2. And then after that, we have our stage 2B. And then the bull market started to take a hit, okay, in a meaningful way, okay. Now, yeah, I mean, this the stage 2B kind of peaked here, in, let's say, 20 end of 2021, November time period, and then it kind of, the real bear market started in January of 2022. So it's a decent amount of lag, okay, when these things start to peak. But just thought I'd show you guys that, which is interesting because, we had this peak here, and then the April tariff tantrum happened, and then now we have this kind of new bull market here, in stage 2 stock. So that's something I wanted to show you guys today. Okay, and on the flip side, I wanted to show you guys, this is stage 4, and it's the same kind of logic, right? Entry into stage 4 within the first 6 months, and then stage 4 after 6 months. And you can see the light, the bright, and the dark red. And as you could see here, even though we've been in a new bullish market, these numbers are fairly high. Um, it's just stage 4 has been very high, which tells us that this market is, very bifurcated. And if you're not in the right stuff, that's actually pushing the market higher, you actually could not be doing so well this year if you are diversified into some other things that, are supposed to give you diversification and help, but they're actually not. So just wanted to show you guys that it's very high. But we did just have this nice spike in stage 4 stocks recently, and that's what started this little bull market we have here. So let's go into some other breadth metrics. Okay, so this is the 10-day trend indicator, which is a volume indicator. And essentially, anytime it's above 1, bearish action starts to follow. And we have that, okay? And it seems to be pulling back from that. And a lot of the small caps have been getting really crushed recently. And also crypto's been getting crushed. Everything's been getting crushed except for the stuff that's pushing the QQQ higher, which is the data center build out. So the 10-day trend is coming back down. We'll see what happens after today with that data, but we are still above 1, which is the first time, basically, almost our second time this year we had such a move up and a spike in that indicator, which says that people are selling the ask. Okay, so the long-term breadth was about to break out here above 30, and then we pull back heavily. And yeah, it's the breadth is not looking so hot, after that breakout. Okay, and this is the drawdown of the IWV index. So we are currently in a pretty decent drawdown of about 1.5%. So monitoring that for potential acceleration of that drawdown because the green cycle is nearly over, as we saw in the beginning of the video. Okay, so this is the DeMark, buy sell. This basically just tracks very strong momentum of stocks either on the upside and on the downside, and these things typically spike. Okay, and what's been really interesting about this market is there's been no spikes in this. It's been very grindy action, very um, non-anxious action. It's just the market knows there's no real fear, okay? Because this kind of is a different kind of a fear index where these types of momentums kind of really spike, and we haven't seen that. We did have a spike recently in the red, but it didn't really go high that much. It normally goes up to about 700 when it really spikes. So that's the DeMark indicator. This is the 20% bull bear, and as you can see from the April lows, we've had a really good amount of stocks that have been up 20% in 5 days. We did get a spike recently of 20% down moves, which is worth noting. I mean, that's the initial sell. That's the change of behavior of this entire trend, in my opinion, which signals that we could see some weakness because that was the initial sell when everybody who has been holding for basically the entire year decided to sell everything. And then now we have some late dip buyers coming into the market. So, but still accelerated or elevated level of 20% bull stocks. Okay. And then we have the Bollinger Band. This is stocks outside of their 45-day Bollinger Bands. And similar story to the 20% moves. We're seeing spikes in red that we haven't seen, the whole year. And so you can kind of 1, 2, 3 red spikes recently of stocks getting outside of their Bollinger Bands. So that's a cause for some caution. This is the anxiety index. And this is another interesting thing. There's the market is very complacent here. There's no panic, and it's just not the best market to add new capital, in my opinion. This is very late or mid-ish late cycle, and yeah, if you for new buys, you like to see this number above 20K, and 30K is the best. Between 25 and 30K is the best for long-term buys. And getting to the end here, I just wanted to show you my short-term momentum index. And as you can see right now, we're seeing a very big pickup in bearish action and a decline in bullish action, which is interesting with the markets at highs and they're not going down. So it just tells you that underneath the surface, there's a lot of destruction happening. And so that's the short-term momentum. And then also this is the correlation index. This basically shows how correlated the top 50 holdings of the S&P 500 are, and we are in a bullish market when the correlation is low. We are in a bearish market when the correlation starts to pick up. So we did get a decent pickup here, but it's just extremely low here around 12, and that's cause for more bullish action in the top 50 holdings for the S&P 500. But we could see that rapidly change as we saw it previously before the run up of the April decline. And with that, that's all the indicators I have for you guys today. And yeah, hey guys, if you like that information and you're curious about anything you guys saw in the video, feel free to leave a comment down below. And really appreciate all you guys joining and having a good time with me. Yeah, if you guys like the content, hey, feel free to hit that like button and subscribe. And yeah, let me know your thoughts. All right, so I wish you guys a great week, and I'll see you guys on the Wednesday Top Stocks video. See you guys later. Cheers.